Hi, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. We have a lot of queries that have come through and we have some experts joining us as well to help you out with that. But before that, a quick look at the market. We're around 65 points in the green for the Nifty. So hovering around those, the highest point of the day. It's looking quite good, 0.4% higher. We've seen a lot of support come through from the broader markets today. The same thing that we've seen, playing out the rest of the week as well. So you have the advanced decline on the back of that, which is looking quite positive. You have around 1,900 stocks which are advancing for around 900 which are in the red right now. So looking quite positive over there. The Nifty Bank also, by the way, has really moved up. It has broken into the green as well, around 40 points higher on the Nifty Bank. So looking good. We did have a bit of a muted start, but it's only moved higher since then. That is the good news. Let me, on that note, invite our guests on the show. We have Ruchit Jain joining us from 5paisa.com as well as Parthiv Shah from Tracom Stock Brokers. Ruchit, Parthiv, thanks a lot as always for taking out the time and speaking to us today about all of these individual queries that have come through. There have been many. So let's kickstart this show with a stock that has really been in focus the past couple of days. That is Bajaj Finance. We had a stable set of Q4 earnings as well that came through. And the query is from Sheetal Sinha, who writes to us from Mumbai. She says she has 15 shares of Bajaj Finance, which she bought at 4,500. Now, she's a short-term investor and wants to know whether she should stay invested or get out. She bought at a good price and is already sitting on a decent profit there. Parthiv, let me come to you. She's saying she's a short-term investor, so I would think a couple of months on this one. Do you think for that time horizon it is good to hold? Parthiv, can you hear me? All right, looks like we have some trouble with that connection. Ruchit, if you can come in on this one, Bajaj Finance, of course, after its results, we did see a move up, but all of this month also it's done quite well, around 15% higher for the month. Do you think for the next 3-4 months, it could move even further up?
Yes, I very good afternoon, Pavitra. I think the price-wise correction has already been done. We have seen that after a good amount of underperformance of about 3 to 4 months, off late, again, the pullback moves have been seen in the stock. On the higher side, technically 6,400 to 6,500 would be the major resistance zone which could come out. So hold on to the stock as of now. When the stock comes around 64, 6,500 in next 2 to 3 months, ideally those would be good levels to book profits in this.
Okay, 64, 6,500 could be, a price that you could see in Bajaj Finance in the next few months. Let me try with Parthiv once more. All right, looks like we still have some trouble connecting to that. So we're going to keep trying to repatch that connection. In the meantime, we have another query which comes in from Jitesh Khurana, who writes to us from Punjab. He says he has 50 shares of Hindustan Unilever HUL at 2,000. He's a medium-term investor. And given the company's performance, he wants to know whether he should hold or sell. Ruchit, what do you think of HUL? I mean, he bought at, around 2,000. Is that what he said? Yeah, he bought at 2,000. He has 50 shares and he is sitting on a profit here as well. He has a medium-term horizon on this stock. I know this is one of those stocks that you normally talk about holding for a longer period of time, but do you think from a medium-term perspective also it is good to hold?
I think at current levels it should hold on because the stock within the FMCG basket has already seen a bit of relative underperformance, I would say. But whenever the stock has seen any kind of correction in last 4 to 6 months, 2,400 has acted as a good support, and the stock is now trading quite close to that support end of the range. So it's the risk that it's better to take some more risk over here. And since its buying price is also at lower levels, so I think keep a stop loss below 2,350 or 2,360 and hold on in case if this support of 2,400 does not breach. Then we can expect another leg of upmove in the stock going ahead in next 3 to 4 months. So it's trading around its support, and that's the only reason I think we should keep a stop loss at a bit lower levels and continue to hold on this stock for now.
Okay, got that. Ruchit, is there anything else that you like from this consumption basket?
I think ITC would continue its outperformance. Now we have seen a good run-up in the ITC over the last few months, but still there are no signs of reversal in the stock. And within this basket, ITC and Britannia, I would add one more name to that. So I think these two stocks from the entire FMCG basket are likely to continue to do well. So in case if he wants to make a switch from a medium-term perspective, then Britannia or ITC could also be good options.
What is the target price that you see on ITC? Because, this year it's up around 27%. In this week alone, it's up 3%. So what is the kind of price that we can expect on ITC? Say from a 6-month perspective.
Yeah, so in fact, if we look at last 4 to 5 months, the stock no doubt has been an uptrend, and whatever corrections have been there in the stock have been more of a time-wise corrections. Means when the momentum readings goes overboard, the stock consolidates in the range for some weeks, and it again resumes its uptrend. So this pattern is quite bullish. On the higher side, the reciprocal retracements indicates a target projections around 450 to 460. So maybe, of course, it could take some 3 to 4 months to reach there. But at least 450 to 460 would be the target range in the medium term that you can expect in ITC.
All right, that is a very bullish view coming in on ITC once more. We've got several of them for you this week. The next query comes in from Pratik Tana, who writes to us from Gujarat. He holds 250 shares of HDFC Bank at 1648 each, and he also has 15 shares of LIC, which he bought at 904. He says he's a medium-term investor and he wants to know what he should do. So, of course, he's making some money on HDFC Bank, but not quite on, he is seeing a little bit of a loss on LIC. So, Ruchit, coming to you on both of these, HDFC Bank, take us through what you expect here in terms of a target from the medium term. And also LIC, considering he's making a loss, do you think he should just get out, cut his losses, or maybe if he holds on for a couple of months, things could get better?
So for the post-listing, we have not seen any significant trended moves in LIC. So it's very difficult to form a technical view on the stock, whether the stock would show any kind of trended move in short to medium term. So I don't have much view on LIC Housing Finance, but still HDFC Bank looks quite robust because within the private sector banking space, a decent outperformance has been seen. Even if you look at the price volume action, the moves have been supported by good volumes. So here I think the downside seems to be very limited. On the lower side, 1620, 1630 is a good support range for the stock. Until that is intact, you can slowly and gradually expect levels around 1800 in short to medium term. So HDFC Bank, I would advise to continue to hold on, keep a view of at least 2 to 3 months, then you can see even levels of 1800 on the higher side.
Okay, so hold on HDFC Bank. Parthiv is also back with us. Parthiv, I think there was some connection error in the beginning, but hopefully you can hear me now. The query is from someone who holds 250 shares of HDFC Bank at 1648 and 15 shares of LIC as well at 904. What do you think of both of these investments from a medium-term perspective?
Good afternoon, Pavitra. Sorry about the technical glitch. So I think firstly talking about LIC, as Ruchi rightly mentioned, ever since the IPO, this has been a big dampener. And despite the fact that there are some internal improvements in terms of the VNB margins, and I think we are seeing that the management is categorically focusing on the non-par business and trying to improve the VNB margins. But still, I think despite the very tepid valuations, which is now gone under 1 in terms of price to embedded value, we are hardly seeing any traction in this company and in this stock. So I doubt in the short to medium term if there are any triggers which can lift the sentiments and take the stock higher. So I think for medium term, probably it's an avoid. Talking about HDFC Bank, I do agree with the fact that at these valuations of around 2.8 times price to book multiple on an FY25 basis, I think the bank is looking very attractive. No doubt the management has talked about the merger synergies going ahead. Initially, probably it will take some time, but looking at the fact that the way they are taking a lot of market share now, because they have a fantastic liability franchisee, they have very good ROAs, and now I think they are becoming a little aggressive on the unsecured loan book as well, so which will help them to maintain their NIMs. So I think they're doing a fantastic job, and our sense is that it's a fantastic compounder, and from here over the next 2 to 3 years it can do reasonably well.
Okay, got that. And since we were speaking about the insurance space, Parthiv, I also want to get in your views on both SBI Life and HDFC Life. We had, their earnings which came out, and they both moved in completely opposite directions on a lot of things, on their growth outlook, etc. as well. How do you look at both of these companies, and is there a clear preference of one over the other?
So that's a great question. So in the basically life insurance space, we saw that post the budget announcement, both these companies and the entire life insurance companies, I think they had fallen a lot. After which we saw a fantastic recovery, and what I think after the recent results con call, I think it's very evident that both the managements are talking about the fact that this is a sector where they expect at least 15 to 20% of value of new business growth, and they're expecting very decent margins, and they do firmly believe in terms of product innovation. So I think despite this glitch that came out of the budget, I think these companies will innovate their way out and find newer products. So I think they are focusing a lot on protection, and out of the two at the current levels, we are a little more biased towards HDFC Life, because I think this is a company where they've always been innovators in the new product segments, and we do believe that they have a fantastic technology platform and their channel network is extremely strong. They've retained their market share, and going ahead, they are going to be a little more aggressive, despite the fact that they've lost on some VNB margins. But I believe that going ahead, they can recoup that. So HDFC Life at around 3.2 price to embedded value valuations look good, and I believe that HDFC Life could outperform over the longer run.
Okay, got that. Very useful on both of these life insurers. Parthiv, since we disconnected, I'm going to go back to one of the queries that came in, because the stock really has been in focus, and that's on Bajaj Finance. The query is that there are 15 shares of Bajaj Finance which are bought at 4,500. The person who's invested is only a short-term investor. So she wants to know what to do with that kind of time frame in mind. Do you think that it makes sense to hold from a short-term perspective, or would you say take your profits out?
Little tempted to suggest to take profits. The only reason being that the entry point has been fantastic for her at 4,500. And what we saw in the recent results is, I think, nothing to shy away in terms of what the management has shown in terms of performance. Fantastic customer acquisition, fantastic AUM growth, ROAs of upwards of 4%, which even the best of the banks kind of fail to do. But we know for the fact that at around 6,200 levels, I think this is NBFC which is quoted at around 6.5 times price to book multiple on a forward basis. No doubt, I think growth is there, but what we also feel is there's a lot of competition emerging in the consumer finance segment. They've also been focusing a lot on the housing finance side of the business, where again there's a lot of competition. So probably market is penciling that going ahead. I think if not a massive price correction, there could be a time correction in this stock, which is where I feel that she's better off switching this position into a better run bank, something like a Kotak Mahindra Bank or an HDFC Bank, which we just discussed. I think over the next 2 to 3 years, we're expecting better returns out.
Okay, got that. That is on Bajaj Finance. Now, the next query coming in is from Vipon Gaur, who writes to us from Pune. He holds shares of Hindustan Petroleum, that's HPCL, at 430. He's a medium-term investor and wants to know what he should do. Should he hold or should he sell? Ruchit, at 430, it's pretty much near the highs, right, for HPCL. And the current price is closer to around 250. With only a medium-term perspective, does it make sense to just cut your losses now?
No, I would advise to continue to hold on because I think the price-wise corrective phase is somewhere over in the stock. We may see some consolidation in the short term, but at least I'm not expecting any significant downmove from current levels in the stock. And I know on the higher levels, 300, 320 would be the range which I think the stock would test over medium term. So hold on at current levels. Probably if the stock comes around the 300 levels, maybe next 4 to 6 months, that should be ideally those levels where again you should take a review on this.
Okay, hold for a bit and you could see prices of around 300. Parthiv, your call on HPCL, would you advise holding on this one as well? It's just a medium-term view.
See, but in the oil marketing company space, I think all the three companies, which is HPCL, BPCL and IOCL, would do well. And the reason after a very long time that we expect them to do well is that, now the government is allowing them to earn their marketing margins, which were lost, when the oil prices had gone up to 120, 130 levels. Of late, the oil prices have been extremely stable, and what we see is at the pump level, these companies have not really changed the prices to the lower end. So that is the reason why we feel that they will regain their marketing margins, especially in the diesel segment, and also in the refining segment. We saw some of the other OMCs, PSUs like Chennai Petro, they delivered stellar numbers. So we are expecting these companies to do well. But I believe that out of the three OMCs, I think the best value lies in Indian Oil Corporation, because they have one of the most complex refineries, and we expect that their refining business to do very well, petchem business to be very stable, and the retail business also to be extremely good and healthy. And the dividend yield out there is also most attractive. So I would be more biased towards IOCL, and I would suggest a switch from HPCL to IOCL.
Okay, you could consider switching from HPCL to IOC. That is view coming in. But with that, Ruchit, Parthiv, I request you to please stay on. We are going to get into a very short break, but we have lots more queries lined up in just a bit, so stay with us.
अरे अभी तक मटेरियल आया नहीं।
पैसे नहीं है, मटेरियल कैसे आएगा?
अच्छा,
पैसे का अब भी टेंशन मत लो। यू ग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
I am heat. AC gone.
Blue Star on.
Blue Star fast cool inverter AC with voice command. Bye bye heat. Blue Star.
Z-Block Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
We are all different, but our soul is the same. We go wherever life takes us. And we do it in our own way. Because it's our differences that make us who we are.
घर रेंट पे देना है और ये अब तक ब्रोकर के पीछे पड़ा हुआ है और मैंने नो ब्रोकर पे बिना ब्रोकरेज के एक अच्छा टेनेंट ढूंढ भी लिया।
फ्री में घर लिस्ट करो और आपका नो ब्रोकर रिलेशनशिप मैनेजर सब देख लेगा। तो ब्रोकरेज क्यों देना, नो ब्रोकर है ना।
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। Powerful charts and research tool. One click trade is the new cool. Get access to live market data. Margin funding भी है रे बेटा। 5 पैसा ऐप करो install. Trading made simple, simple for all. With 5 पैसा's wide range of products. यहाँ वहाँ चाहे हो जहाँ. Simply trade on the go. ऐसे करते हैं trade. सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. You're still tuned into Your Stocks, and we have Ruchit Jain and Parthiv Shah with us to answer all of your stock-related queries and get you a complete technical and fundamental perspective as well. So let's get back to those queries then, because the next one comes in from Suman, who writes to us from Chhattisgarh. She holds 50 shares of Paras Defense that she bought at 589. She wants to know whether she should hold or sell at current levels. Sitting on a bit of a loss there. Ruchit, take us through what you think, because obviously, you know, we have been seeing these stocks rally and do quite well, but Paras Defense in particular is a stock which at its highs was perhaps double of its current price, right?
Yes, I think a lot of underperformance has been seen in the stock, related to the other defense stocks of late. Some pullback move has been seen, but the volumes are not that high, which gives confidence of any trended up move. So I think here I would advise to make a shift. From Paras Defense to some of the other defense names, maybe a Mazgaon Dock would be a better option from a short to medium term perspective. So the view is not much positive in Paras Defense, but rather I would advise to make a shift to either HAL or Mazgaon Dock. These two stocks within this sector looks relatively much better than Paras Defense.
Okay, better than Paras Defense. That is the view coming in. The next query is interesting. This one is Vijay Shankar, who writes to us from Ghaziabad. He says he wants to invest in MRF and asks if it's an advisable time to purchase the shares. It's not a stock we talk about very often, but Parthiv, let me come to you on this one. Your take on MRF, 88,000 rupee stock.
Yeah, I think it's been a stellar run for MRF shareholders since last many years. And I must give full credit to the viewer in terms of wanting to select one of the finest tire companies. No doubt we do like MRF. They have one of the highest replacement market share, and the fortunes for the tire companies are looking very upbeat. MRF is a typical type of a tire company where we see that thanks to the share in the replacement market, they tend to do EBITDA margins of upwards of 20% when the cycle is good. Of late, I think we had seen all the tire companies not do well in terms of their margin performance. So I think the outlook is improving. My only concern is that the other peers, MRF is slightly more expensive. So a lot of goodness in terms of the improvement in the margin seems to be factored. The company that we would like in this sector is CEAT. I think here we feel that the margins could expand, and they had already done a lot of expansion. The gross block had increased. So I think with the underutilized capacities now getting utilized, I think CEAT can show a huge amount of operating leverage. valuations are also a lot more comforting than MRF. So I would suggest buying C8 over MRF at this juncture.
Okay, got that. I'm going to ask Ruchit as well. Ruchit, what do you think of MRF right now? Would you recommend that someone get into this stock at these levels?
Well, not really. Even I have a similar view that if you want to invest in the tire sector stocks, then Apollo Tyre and C8. These are two better placed technically. C8 is on the verge of a reversal from its recent corrective phase, and Apollo Tyres have been showing a good relative outperformance in this entire sector. So I think rather than MRF, if you want to invest in the same sector, so I would advise to go with C8 or Apollo Tyres.
Okay, got that. That is on some of these tire names that we can perhaps look at. And I think both of our guests recommending that perhaps C8 is a better bet right now than MRF. The next query, let's just try to squeeze in one last one, is from Bhanu Prasad, who writes to us from Bihar. He holds 160 shares of Graphite India, bought at 474, as well as 2 shares of Laurus Labs at 393. He's a medium-term investor and wants to know what he should do with both of these. I'm going to come on Laurus Labs first to you, Parthiv. Take us through what you would look at it as after this weak set of numbers that has come through. Of course, the stock is up today, but that's already because it's down around 50% from its 52-week high. Do you think that this, considering that, it has come off significantly, is a good price to be getting in?
Yeah, I think unfortunately the management guidance since the last 3 quarters has not been beaten, and rather the company has overall performed very badly as compared to what the street was anticipating. And still, I think it's not going to be easy. At least next 2 quarters, there's a lot of uncertainty. They have a very decent capacity built up, but that stays underutilized, as a result of which we are seeing, diminishing margins. And also, I think there were some COVID-related products which was helping them boost their top line and margins, which now is not the case. So I think it will be important to see how the management recovers this. And more importantly, I think the stock had been beaten almost by 50% from its peak valuations, and still I feel the valuations are a little on the expensive side. So I would suggest an avoid here, because I think we'll have to monitor next 2 quarters. There's not much visibility in terms of any sort of momentum or any triggers in the stock. So I would suggest an avoid on Laurus Labs at this time.
All right, avoid on Laurus Labs. In fact, we were going through a lot of the brokerage notes on this one as well. And across the board, it seems like, there is confidence lacking for sure. So we have Jefferies, which has downgraded it to an underperform. They've actually cut the target price to 250. Currently, the stock price is around 307. You have Antique also, which is looking at a target of 294. Ruchit, your call on Laurus Labs? Would you also avoid it right now?
I think yes, if you're looking for fresh buying, then it should be avoided. There may be some pullback moves because the stock has already corrected significantly from higher levels, and momentum readings are a bit oversold. It would just be a retracement of the recent correction, because the trend would not change until we see a price up move supported by higher volumes or a higher top, high bottom structure getting in place. So until we see the change of structure entirely, I would even advise to avoid this stock.
Okay, avoid Laurus Labs. That is the view from both of our guests. But on that note, we're going to have to wind down. Parthiv, Ruchit, as always, thank you very much for taking out the time and speaking to us today and helping us go through all of these individual queries. We leave you with the markets up around 50 points. It's looking quite good there. The Nifty Bank, however, has moved back into the red. But check out the move on Reliance Industries and on Kotak Mahindra Bank. Both of those are the high point of the day. Kotak posts results tomorrow, so that'll be interesting to watch. Reliance now up 1.3%. That is view coming in. Remember, you can always email us your queries and we will take them up with our experts. Stay with us. Closing bell is up next for the last hour of trade.